Welcome back, everybody, to Debate Crypto. I'm your boy, BlockchainCrusader. What's going on, guys? If you guys aren't ready for today, get ready. We're doing a Saturday morning stream. Man, I can't even speak on Saturdays. Probably why we don't stream on Saturdays. But guys, I'm excited. There is massive news that I want to be covering with you guys, and I couldn't wait till Sunday to bring it to you. I mean, we've got Bitcoin, we got Ethereum, we got Chainlink, we got XRP, we got Huobi, we got banks in trouble once again. We also got Polygon news, massive Polygon news on deck today as well. So, guys, if you're not strapped in, strap in for a great show today. Smash those likes, share it out with everyone you know, and let's get ready, guys. It's going to be a crazy ride. So I just want to quickly jump into the chat, see how everyone is doing. Dynastic Wolf, what's going on? Patrick Caveman, what's up, man? Patrick Leesman, Green Day Prophets in the house. Arua Bazoo, Kevin Bilo, what's going on, guys? Smash those likes. Appreciate all of you guys being here on a Saturday morning, almost afternoon at this point. But I think we might do more Saturday streams. I don't know. Maybe that's back on the plate. I got some big news. If we get to 100 viewers, I got some big news I'm going to be dropping on the show today, but only if we get to 100 viewers, guys. So share out the live, get as many people rolling in here as possible, and maybe if we get there, I will drop this massive news. Also, massive shout out to the members of Debate Crypto, Kenton and Billy, massive supporters of this show. Guys, if you guys want to support us at all, smash those likes. But if you want to become a member, greatly appreciate it. Get some pretty cool emojis, get your name in green, and get shout outs every single episode. Guys, let's get right into it. Let's see what's going on in the markets. We had a little bit of a pump yesterday, a little bit of exciting momentum, but let's see where this is actually all headed. Because realistically, right now things are looking good, right? Market cap, and do a quick little refresh here. Market cap is up 1%, right? Up 1.06 trillion. Bitcoin's above 26,000. Ooh, it's feeling good, right? Feeling good, feeling good. But can this be sustained? We're going to be covering that. So overall, 2.5% in the week. We feel like I feel like we're in the stock market here, man. Getting excited over 2.5% in 1 week. Ethereum up 1% in the last 24 hours, above 1,635. Always good to see. Everything else is about the same, right? A percentage, maybe less, give or take. TON up 12%. Been having some pretty big news about TON, but I haven't covered TON in my own deep research just yet. So we might not hit that one just yet. We got Tron, and we got, we'll see, what was the top 10? TON has moved up into the top 10. Polkadot, Polygon falling out here in the top 15. We got some good news about Polygon as well. But let's see what Bitcoin is doing on the charts, right? Over here, still in the same consolidation range that we've been talking about, right? So this is the yearly range. These white lines are the value area high and the value area low. We are back above the value area low after the other day on September 11th. We had that dump, right? And then we've been crawling back up ever since all week. But we've hit this annual pivot, right? This annual pivot is massive. As you guys can see here, when we were above it, we were, making some good time using as support. But when we broke below it, we only had this one single print. They just blasted right past it, and we never retested it. The fact that we never retested and stayed above it, the minute we did drop down, we single printed right through it as well. So it's a weak area, right, that we haven't actually built a lot of support on, because we had support, we broke it, and then we came back up and we flipped the resistance. We didn't retest the support to see if it could hold, right? So now that's what we're doing. Now we're feeling the pain here with the resistance. We keep hitting it, we can't get above it. We broke above it in a single print. When we came for the retest, we melted right through again. And then once again, we're hitting it now as resistance. Hopefully, we can flip this bad boy into support, which is at 26,736. If we can flip this bad boy into support, we would be golden for a good amount of time, right? The next big level is going to be this Q3 pivot at 28.9, which is right here, right below, depending on how soon we go up there, right? If it's in the next couple of days, it's right below the regression trend, the yearly regression trend, to reclaim it. So it's going to be difficult. I could see us flipping around here between 26 to 28 if we do flip 26 into support, just how we're doing down here before we move up, right? Like I've been telling you over here on Chart Prime, things are looking good. Things are having some upward momentum, but like as you can see, we hit oversold all the way back here. And ever since we've been trying to make these reclaims, but we just been hitting massive resistance. We haven't had a big move to the upside at all in the daily. So, guys, I appreciate all the chats. Greatly appreciate it. Says, let's see what A1 says. Maybe not, but he took offer they gave him to leave. That's on him. Uh, don't know what that's talking about. No worries, guys. No worries. I don't know. I don't know what it is that you guys are talking about over there. Greatly appreciate all of you guys. Keep smashing those likes. Greatly appreciate everybody in the chat right now. So let's continue on. Right, like I said, here, Chart Prime looking good. Annual PIV is our biggest enemy right now. This annual PIV of 26.7 is our biggest enemy for Bitcoin. If we can jump above this and hold as a support and test that support level, then we could be on the way back up. But until then, expect if we don't break above it, we're going to probably come back down, retest this value area low, right? At 25.5. If this doesn't hold, we can see once again another move down here to the quarter two pivot of 24.7. If this 24.7 breaks, I've been telling you guys, strap in, right? Strap in. The altcoins are going to feel the pain if we lose this 24/7. Let me tell you. Could it be a massive opportunity? Maybe, right? Obviously, not financial advice. But if we do break below 24,700 and the altcoins feel the pain, this could be, in my opinion, one last shakeout, one last drop to the downside before the bull run, right? Before the next big event. And it could be the last short period of time that we could accumulate some very cheap altcoins, some very cheap ETH, right? Because if that breaks, ETH is probably going to be heading down to that 1400, 1300, even maybe 1200, possibly a little bit lower than that as well, depending on how drastic the dip for Bitcoin is, right? If Bitcoin breaks below 24, it goes all the way down to 20, maybe even 19, then we could definitely see a way closer Ethereum to $1,000. And not financial advice, not telling you what to do, but I am definitely going to be accumulating at those price points. So I'm not going to be worried if we drop down below. It's not the end of the world. Think that is the bear market. Those are called opportunities, and I am willing to take full advantage of it when the time comes, because those prices are probably never going to be seen again for a very, very long time. I mean, last time I was buying massive amounts of ETH, not that I haven't dollar cost averaged some ETH throughout this bear market, but large amounts was back when it was at $200, right? And I wish I bought more, 200, 180 bucks. I wish I would have been buying a lot more, and I didn't, right? Because of fear all the time. But if we drop down to 1,000, same fear is going to play for people that got in around that same price point, right? Maybe got in at 800, maybe got in at 1,200, give or take. And they're going to have that fear. But then once Ethereum and the bull market continues to grow throughout this next cycle and the rest of this decade, a $1,200 ETH will probably not be seen for a very long time, if ever again, right? We could hit to a whole new low in the next bear cycle that we don't even get near 1,200. We don't even get near 1,500. And people are going to be kicking themselves saying, man, I wish I was buying at those prices. I wish I would have been accumulating at those prices, right? Everybody says it. It happens every single cycle. And we're at the highs. Everybody talks about the lows and wanting to accumulate at the lows. When we hit lows, nobody wants to accumulate. And then once we pump back up, that's when everybody wants to buy. That's the name of the game. And that's how you got to control your emotions, manage your risk, and make sure you're doing the best you can possibly do to grow your portfolio. So guys, smash those likes if you haven't smashed those likes. Let me know what altcoins you're picking up. I have a poll out there with 4 altcoins on it. We got ETH, we got Polygon, we got Chainlink, and we got XRP. Let me know in the poll and let me know in the chat what you guys are accumulating. If it's not one of those 4, let me know in the chat right now an altcoin gem that you're picking up. Some altcoins that we haven't talked about on this show, because we're definitely going to be talking about a lot more altcoins moving forward. So Drop that in the chat, guys. Drop it in the chat. But let's start with some massive news. Brad says ADA always, baby. That's what I'm talking about. ADA is definitely one that I've been picking up in the bear market. I've been accumulating that since 2018. But let's start off here with Chainlink, right? Chainlink is one that could be rivaling XRP and has been doing a lot of different things. So let's move on over here and let's move to Chainlink and see what they're doing right now. So Chainlink initiates significant transfer of 10 million Link tokens to Binance. Most people are like, "Oh my God, they're gonna dump Chainlink on Binance. Everybody run." Maybe, maybe not. Let's keep looking forward. So according to the Data Nerd on September 16th, this substantial transfer took place at the price of $6.24 per link, with a total estimated value of $62.4 million, right? Of the well-known Chainlink, known for its decentralized Oracle network that facilitates smart contracts to interact with real-world data. That's in case you didn't know what an Oracle was. Boom, you got your lesson there for the day. You just learned something. So smash those likes. He has continued to play a pivotal role in the broader scheme of things when it comes to blockchain, right? So Binance, recognized as one of the world's largest and most prominent cryptocurrency exchanges, is a pivotal gateway for traders and investors seeking access to a wide range of digital assets. Chainlink's decision to transfer a significant amount of Link tokens to Binance highlights the exchange's importance within the cryptocurrency industry. This also goes to the fact that the purpose and context of this transfer remains undisclosed, leaving room for speculation within the crypto community. Substantial token movements often garner attention, speculation. Oh my God, they're going to dump, right? Including investment strategies, project partnerships, or liquidity management. AKA, people are just speculating right now. People have no idea why it's happening. But let me tell you, it could be Chainlink was low liquidity on Binance because people have been buying up uh, Chainlink. Also, Chainlink, this tokenomics has room for the team to release more Chainlink, to put more Chainlink out there, which is one of the reasons why the price stays suppressed for as long as it has been, and it hasn't done like these crazy movements unless it's in the bull market. So I wouldn't be worried about this. I wouldn't worry about people's speculations. Nobody's going to be dumping Chainlink. Chainlink is not a dead project. Chainlink has been around and has, proven itself in the test of time here in the crypto space, and has been growing. It's literally partnered with anyone. You throw a dart at any crypto, any tech company, anything that has to do with money and technology, Chainlink is a partner. Chainlink is working with them one way or another. Why? Because they're an oracle. They're one of the biggest oracles, and they obviously, as you guys were seeing in the article, an oracle brings real data onto the blockchain and vice versa between smart contracts and real world data. So they need to be partnered with everybody. They need these partnerships. So they are working on it. They are growing. And I wouldn't be concerned or listen to any FUD about Chainlink and massive transfers to Binance. Nobody's going to be dumping Binance. Nobody's going to be dumping Chainlink, and Chainlink isn't going nowhere but up in the long term, in my personal opinion, not financial advice. Kevin says Chainlink is great, but the ROI isn't going to be as good as ADA, in my opinion. Very possible. I mean, let's take a look here. Today's show is going to be a little different, right? I'm going to have some in-depth conversations here about certain tokens. So let's look at Chainlink's data and compared to ADA. So if we look here, where's Chainlink at? Here we are. So Chainlink, right? Chainlink's all-time high in 2021 was $49, right? $49. And before then, it was around $2, maybe even 44 cents, give or take, right? Obviously, we're never going to see these 44 cents levels again. We're currently at this $6, $7 range. So even if we hit, which obviously is not the kind of math you want to be doing, right? This is not how you do, but just quick speculation, quick, just basic moon math. But if we were to hit again an all-time high of $50, right? right, from where we're at, it's maybe about a 5x or so, right? Which is not that great compared to what ADA can do, right? Market cap obviously is a lot higher now than what it was back here. Right. So if you got in when Chainlink was, below $1 in 2019, right? Or even at $2, you're gonna definitely made a big all-time high. But we're not gonna see that again, right? Look at their supply. Their circulating supply is only 55% out. 55% is still 45% is still in there for the team to be distributing and doing other stuff with it. And they have a total supply of one, what is that, 1 billion. My eyes can't see this right. It's monitor's too far away from me. But it's, yeah, it's 1 billion tokens, right? Now let's compare this to ADA. So is there a compare button here? Like, yeah, compare with Cardano. Look at this. Look at this. So price of Cardano, right, compared to Chainlink, ADA being the orange, massive breakdown from where it was hit at where it hit $1 in 2018, right? Came all the way down and then massive write up in price action. So let's look at, actually, I don't like this chart at all. This is a terrible comparison here. Let's just jump over to ADA itself. Jump over here. Let's look at this on its own. So Cardano, right, all-time high was basically $3. We're down at 25 cents. Do some math there. There's way more than a 6x for Cardano to hit $3. We're closer to the 10x area. Cardano has had a massive, lifespan in this space from back in 2018 when it hit $1. It rode all the way down to basically 5 cents, even 2 cents for a long time, and then it rode all the way up to $3. This run up happened with no smart contracts. This run up happened with basically no NFTs, with nothing really being built on the ecosystem besides its basic layer one solution. Now we're back at 25 cents. Could we go lower? Maybe. And I'm actually looking to see if we do go lower, definitely going to be accumulating a lot more. Because if this was the all time high, obviously, this is not how you do math when it comes to investing long term. But if the all time high was created through the bull market without any real substance of smart contracts and TVL being locked up into the network, once everything that's been built, all the NFTs, all the smart contracts, all the things that we've seen here throughout this bear market and through the beginning of the end of the bull market to the beginning throughout this entire bear market, I have no doubt in my mind that we can reclaim that $3 price point for Cardano. Cardano's circulating supply is about 78%, 78, yeah, almost 78% here. So there's no reason why Cardano cannot reclaim $3 with higher TVL in this next bull market and higher level of NFTs and just overall smart contract usage, right? Something that we haven't seen from Cardano at its peak in a bull market just yet. So for those reasons, I'm extremely bullish on Cardano as well. Obviously, not saying that anything is wrong with Chainlink, right? But look at it. Chainlink is Cardano's in the top 10. Obviously, top 10 coins when it comes to risk management are safer than the other ones. Obviously, they have a larger market cap, smaller moves, but even though it's a top 10, it's still close to having a possible 10x versus Chainlink, which is down in the top 20 with a way smaller market cap, right? Yet could possibly maybe 5x, right? Could go higher. Obviously, could always go higher. It's a bull market. We break all-time highs and we can go to the moon. You go straight into discovery mode on prices. But if we're just comparing from price data of history with historical data of all-time highs, just reaching the all-time high, there's a bigger move for Cardano than there is for Chainlink. But that doesn't mean that Chainlink is going to stop at $50. It can easily, possibly go up to $100, even more, right? And double up from there. So you just never know. Just like Cardano, I'm speculating Cardano is going to hit at least $7 in this next bull market. That's just speculation. We'll see when the time gets there. Never financial advice, not telling you to go buy anything. That's what I'm talking about, what I'm doing and what I'm looking for. But let's move on to the next article here, guys. The next article is actually a pretty important one here. Huobi has been discovered leaking user private keys. This goes back to the main concern that I always tell you guys: not your keys, not your coins. We need to keep things off of centralized exchanges. Anything on centralized exchange is a concern and possibly at risk of being lost one way or another. I mean, it's just never safe, right? It's never safe. Your crypto is not about trusting others. It's not about creating bank accounts in other people's control. It's about being your own bank. And to be your own bank, you control your own thing. You keep your stuff off centralized exchanges. So, according to Wu blockchain reports, this breach has led to the leakage of some user, well, that's not even a word. Okay. And private keys. Law enforcement authorities have initiated an investigation into the former employee's involvement. The iToken system prompts the user with some wallet address have security risk. The security agency submitted the asset protection to refund your coins and transfer the funds in the address to a safe address. Refund your coins will launch a retrieval function to facilitate obviously the loss here. The fallout from this breach became evident when a hacker address linked to a compromised user account showed a significant loss of $1.3 million on September 2nd. Subsequently, the iToken system issued warnings to users about potential risks and associated with certain wallet addresses to safeguard your assets, yada, yada. Long story short here, we're not going to go through this entire article. Keep your stuff off centralized exchanges. This also comes during a time where I believe his name is Jasper has lost like $700,000 from a hot wallet from MetaMask. I heard about it yesterday talking to Keeper on the phone. That's tragic, right? Whether he has a ton more money, right? Whether he has millions more or not, doesn't matter. 700,000 is $700,000 that was lost. Why? Because you're keeping stuff on hot wallets, things that are connected to your browser, which you get all these scammer links to your email, you get all these scammer links on Twitter and social media, and it's the smallest little click anywhere, and you're compromised, and your wallets get compromised, and your wallets get drained, and you lose your money, and then you're at the mercy of some of these institutions or tools to be able to retrieve your money, right? As the hackers sell off your tokens. Do not keep any large amounts of money on hot wallets, aka browser wallets like MetaMask, or on your phone. Keep chump change on there. Excuse me, guys. Keep chump change on there. You know, maybe a few $1,000 here and there to buy some NFTs, do some transactions, do some yield farming, but don't trust your MetaMask wallets and your hot wallets to be your bank account because they're not safe, right? You can get hacked at any moment and get drained from the smallest little thing, right? Anyone can come into this chat and drop a malicious link, and somebody clicks on it, and boom, it's over for you, right? So do not do that. Do not learn from these people's mistakes. Learn from these news articles. You've been here throughout this entire bear market. You've been accumulating, you've been growing your portfolio. Do not be a victim of one of these things. Keep security as number one priority in your investment portfolio, in being your own bank. Security is number one priority, no matter what, because that's what it takes to be safe. That's what it takes to be your own bank. Use hardware wallets. Use diversification of devices, right? Use certain devices for certain things. I have a certain laptop that I only do crypto stuff on. I don't do anything else on there. I don't edit videos. I don't stream. I don't check social media. I don't do nothing on that laptop, only crypto related things, to be able to narrow down any problems, right, that I have with risk and getting hacked. I use my regular computer here for basic things. Social media, I understand there's more risk here involved when I use this kind of contraption, but I only keep small amounts in my MetaMask. I only keep small amounts that I can use on my daily. I do not use them as bank accounts. All right, guys, rant over. Rant over about security. I just don't want to see anybody here lose any amount of their money from any wallet, from anything in our Discord, nothing because of these hackers and because they're not using security as their main priority. But that's it. Rant is over. Let me take a little sip of water. Guys, smash those likes. We got almost 50 people in here. Smash those likes. Remember, if we get to 100 viewers, I'm going to be dropping some massive information here for you guys. Otherwise, you're just going to have to keep on waiting until we get 100 viewers in here. But yes, smash those likes, guys. Greatly, greatly appreciate it. And if you're not a member of the show, if you're not subscribed, hit that subscribe button. We're trying to break 10,000. We're trying to get more members in here. Support the channel. It's rough out here, but we greatly appreciate everyone's support. And it doesn't matter. If you can't be a member, it's okay. Just smash those likes. But if you can be a member, we would greatly, greatly appreciate to see you guys really supporting the show. All you gotta do is hit that join button down there in the screen somewhere. Should be possibly over here in the left hand side, or yeah, your left hand, my right hand. Down here, join button, join the members club, become a member of the DCA fam. All right, guys, moving on next. Let's talk about some Polygon. Let's talk about some Polygon scaling solution. Polygon Matic officially rolls out 3 improvement proposals to kick off 2.0 transition. Whew. It's coming. It's coming, baby. People were so excited about the merge for Ethereum, but Matic is doing some amazing things. And we're going to be talking about the Ethereum merge here pretty soon as well. So stay tuned for that. We're going to be talking about Fidelity. We're going to be talking about a lot of different things. Layer 2 scaling solution Matic is introducing a new proposed changes to the network's protocol as the initial phase of its anticipated technical upgrade, Polygon 2.0, right? We're moving on to 2.0, baby. The value layer of the internet. It's making Ethereum more usable. I think smart what is it? Starbucks and Ticketmaster have been using Polygon for their NFTs, if I'm not mistaken. In a statement on social media platform X, the developer says that the network is rolling out phase 0 of Polygon 2.0 with the release of 3 Polygon improvements, PIPs. The PIPs seek to see Matic's native asset converted into POL token, and POL being used as the protocol's native gas token and staking token. That's right, guys. POL, aka Polygon's own token, is now going to be used as gas. You're not going to be using Ethereum. You're not going to be doing any of that stuff anymore. You're going to be using POL. So this summer, Polygon Labs unveiled a roadmap which aims to scale, obviously, the Ethereum block space to create the value layer of the internet, providing unlimited scalability and unified liquidity. To deliver this vision, the Polygon's protocol architecture needs to be upgraded. Here they come, right? Phase 1, right? It's phase 0, but this is step 1 of phase 0, focus on 4 main upgrades to the protocol. 1, initiation of Matic to POL upgrade. So this is the POL token coming. POL becoming the native gas token for proof of stake, POL becoming the staking token for proof of stake, and the launch of staking layer, enabling validators to secure a myriad of chains in the Polygon 2.0 ecosystem. The Polygon Labs says implementation will start as early as the last quarter of 2023, which we're entering now. So any minute now in this next quarter, they're going to start these implementations, which are massive. I wonder if there's going to be a distribution of PO tokens to people that are already holding Polygon, and maybe I don't know what that's going to look like, if it's a 1-to-1 or a 2-to-1. Who knows? I don't know what, if that's even going to be a thing or not. But if it is, I'm definitely going to be keeping an eye on this POL token. And if anybody knows in the chat right now anything more about POL token, what the distribution or anything is going to be like, drop it in the chat right now. I want to hear your guys' thoughts. All right, guys, moving on forward, we're going to be talking about the Ethereum merge here. It's the 1-year anniversary, so let's celebrate. Ethereum didn't blow up. Ethereum didn't crash. Ethereum didn't die. We're still going strong, baby. So the Ethereum 1-year anniversary, 4 key insights that you need to know. All right. September 5th, Ethereum went through a major update that changed. I remember how people were so nervous about this. They were like, oh my God, if they mess up, it's over. That's it. They're dead. They're going to explode. They're going to crash the whole system. Ethereum's going to destroy itself. And yet here we are, 1 year later. So Ethereum tokenomics data since the merge, right? Let's get this rolling. Data retrieved by Finbold on September 15th from ultrasound.money shows 980,541 ETH were burned in the 365 days since the merge. How many is that in dollars? How much is that in dollars? So let me do some quick math. Obviously, the math is never going to be 100% because these the ETH was burned at different price points, right? 2,000, 3,000, whatever it is. And, it's not going to be perfect, but let's do some rough math here, right? 900, 541 times today's price of 1,600. Let's round down to 16. Well, actually, yeah, let's round up to 17. Fuck it. We'll leave it at 1,600. That is 1.5 million. No, yeah, $1.5 million, and there's definitely been a lot more than that burned. I guarantee in dollars, it's been a lot more than 1.5 million, or I'm sorry, 1.5 billion. What kind of math am I doing here? $1.5 billion has been burned on ETH, and that is, roughly at these low numbers. Obviously, we had Ethereum burning at way higher price points as well. So the dollar amount is always going to be rough. It's never going to be 100%. Moreover, as only 680,724 ETH were issued through validators block subsidy, Ethereum's circulating supply decreased by close to 300,000 ETH in the period, resulting in a 0.25 deflation due to the mentioned updates, which is great because Ethereum doesn't have a max supply. So the burning of Ethereum to make it deflationary is very important for price appreciation, right? It's not like Bitcoin, that Bitcoin has the halvening and it brings down and it has a finite supply. So it is definitely needs a deflationary aspect to it, and for price appreciation is where I was going with that. And this was throughout the last 365 days, which was the bear market, right? We've been in the bear market this entire time. Imagine what's going to happen in the bull market when more DeFi applications, more protocols are being built on Ethereum, more things are being used, right? More NFT sales, all kinds of stuff, all transactions on ETH are burning ETH, right? All the decentralized exchanges, Uniswap, all these things happening are burning ETH. Imagine at the peak of a frenzy in the bull market, how much Ethereum could possibly be burned and how deflationary it could get at that point. But let's continue on here. So meanwhile, Ethereum is trading at 1622 by press time. Obviously, is a little bit higher today. Since the merge, the outcome of Ethereum comes amid a most bearish sentiment in the cryptocurrency market, right? And it's still the second largest, yada, yada. This is huge. This is huge. The deflationary aspect of Ethereum without it having a finite supply is what's going to make it really. Some people are obviously the Ethereum tokenomics enthusiasts start calling it ultrasound money, right? Bitcoin is hard money, it's sound money. Now they're saying that ETH is also ultrasound money. Maybe, maybe not. I don't know. Let me know in the chat right now. Do you believe Ethereum is ultrasound money? Drop a 1 in the chat if you agree. Drop a 2 if you do not agree that Ethereum is ultrasound money. Let me jump here into the chat real quick, see any interesting. Wick says, infinite supply is why this possum face refuses to accumulate ETH. Sorry. That's a valid point, right? That's a valid point. All right. Fiat is infinite as well, but fiat isn't as deflationary as Ethereum is being built to be deflationary right now. So, but I understand what you're saying. I get it. I get it. Right. The reason why I accumulate Ethereum is for the simple fact that it's the largest smart contract application out there. Right. It is the Apple Store of iPhones, right? It's where all the developers want to build, get recognized, get some attention, and grow their companies, aka making Ethereum digital oil, right? It makes the world go round. Everything is being built on it. Everything is going and moving. Move money and DeFi. All these things are being built and created on Ethereum, like it was in the NFTs, right? All these things were started on Ethereum and continue to grow on Ethereum into the largest marketplace for these things. It being considered digital oil for that aspect of making the crypto space go round is why I accumulate Ethereum and risk management, right? It's the second largest. There are tons of institutions behind, not behind, but are getting behind Ethereum and want to start pushing out a spot ETF as well, which we're going to be covering right now. Is why I have been picking up Ethereum. So, talking about spot ETFs, and look who's joining the party, right? Fidelity files for a spot Ethereum ETF application. Grayscale already did one, or it was ARK Invest. I forget which one it was. Um, excuse me, guys. Either one. There's already been one. Here comes the second Ethereum spot ETF. So, according to the breaking information, they claim that Fidelity has filed a spot ETF and under the name of Wise Origin Ethereum Index Fund is keeping the agenda busy. And then it says, correction, although the information received from sources initially interpreted this in development as Fidelity applying for a spot ETF, it is actually thought to be an amendment application made to the SEC for regulatory reasons for the Ethereum fund currently traded by Fidelity. Although it was an unimportant development, Ethereum reacted with an increase after the news spread, right? So apparently, it seems like Fidelity didn't actually go and make the app spot ETF, but like I said, it was either Grayscale or ARK Invest, one of those two, or 21 shares, one of those three that actually did already file a spot ETF for Ethereum. The price appreciation here is not great. It's, whatever. We're at below 1600s and we pumped to 1630 something, give or take, right? But what is notable here is the Bitcoin ETF is huge news, and there's massive amounts of money coming after the Bitcoin ETF. Ethereum is next, guaranteed next on the line, right? There's already Ethereum ETFs in Canada and a few, maybe a few other countries around the world. The next one for sure after this Bitcoin, there's not going to be an Ethereum ETF at the same time as Bitcoin or after, or before. It's going to be after. Maybe some good time, maybe way later in the bull market, maybe for the next cycle, right? The 28 cycle, 2028 cycle, we'll see a spot ETF for Ethereum. But regardless, however you want to say it, spot ETFs and having these massive institutions backing into these cryptos and accumulating will be huge, huge. I see Green Day Prophet says one, Patrick says two, Brad says one. So a few ones, one, two twos. We're kind of even right now on the question about Ethereum. Kind of even. But let's keep moving forward. We got some stuff about you know, XRP. We got some stuff about Wells Fargo and banks. Let's hit some of this banking stuff first before we get into the XRP and the Bitcoin situation. We got some Bitcoin and Ethereum news as well also going on. But let's hit some of this, some good old banking issues, right? 296 billion, $524 million added to US debt in 1 month as JP Morgan Chase issues economic alert. We've been getting a lot more of these lately, a lot more economic alerts happening, right? New data with the US Treasury Department show that the federal debt increased by over 296.500 billion from August 8th to September 8th, reaching a total of 32 trillion. We're at the 32 trillion, almost 33 trillion mark, baby. We're trying to make new all-time highs with the national debt every single day. So that was a metric. I mean, bruh, definitely going to be hitting new all-time highs bullish on that for sure. The new numbers come as JP Morgan Chase CEO Jamie Dimon issues a warning on the America's fiscal trajectory as a conference hosted by Barclay. Yada yada. I just think people make a mistake to look at real time numbers and not look at the future. And the future has quantitative tightening. We've been spending money like drunken sailors around the world. This war in Ukraine is still going on. Those are really big buts to say the consumer is strong today, meaning you got to have a booming environment for years. This is a huge mistake. Meanwhile, Congress is facing pressure to pass a new budget before funding for the US government runs out on September 30th. Once again, government running out of money like always, and they're just like, let's just increase the debt, baby. The debt ceiling, once again, if a deal is not reached on time, about 3 or 5 federal civilian workers are expected to be furloughed as positions of the government shut down. Goldman Sachs says a shutdown will likely lower America's economic growth by 0.2% per week until a deal is reached. Over the years, there have been many near misses and more false alarms than actual shutdowns, which is 100% right. We had this same exact scenario, I believe, back in May or whatever it was of this year. Well, the shutdown's coming. The shutdown, right? We can't agree with how much money we want to spend. We can't agree with how much more. Let's just raise the debt ceiling, baby. Raise the debt ceiling. And once again, we hit new all-time highs. We're about to break 33 trillion in the US national debt. It's not looking good. It's not looking good for the US dollar and the national debt that's being currently just raised all the time. Every time you raise the debt ceiling, they're like, we got money to spend, baby. Spend that money. Spend, spend, spend. 3 months later, oh, sorry, we're out of money again. Oops. Sorry. Guys, if you haven't smashed those likes, smash those likes. If you have not hit that sub, then what are you waiting for? Hit that sub, baby. We're trying to hit 10,000 subs here. Let's make it happen. Come on. I know one of you guys are out there possibly sleeping, so let's wake you guys up a little bit with some massive news over here in Wells Fargo. Right, let's see what's happening over here with Wells Fargo. Wells Fargo allegedly freezes bank account after $207,000 deposit, seizing customer funds without adequate explanation. New lawsuit. Boom. Not even going to jump into this, right? Wells Fargo has in the past been very sketchy with what is happening in their midst in their company. They have created false accounts. They have been doing all kinds of fugazi. They've been getting sued for it for many times over the years. Banks are always creating some level of fugazi to make it seem like they got money moving. And like always, if you're not your own bank, you are at the mercy of these fools to just, hey, we're just going to freeze your assets. We're just going to take your money away. Yeah, you worked hard for it. Yeah, you did this or that. But some little red flag came up and boom, your money's gone, baby. It is no more yours. And if you have no money, you got nowhere to go. You got nowhere to go. You're going to have to comply. You're going to have to beg, gravel, and do everything in your power to try to get your money back, even if you actually didn't do anything wrong. It's just pure speculation. This is what happens when you have your money in other people's hands. This is why crypto was created in the first place, right? 2008 was greedy bankers, greedy institutions taking, and loaning things that they knew people couldn't pay. They knew things people couldn't afford them. And then they took everything from them anyways and crashed the market, right? So why would you trust your money in any of these banks? If you guys trust your money in banks, drop a 1 in the chat. If you do not trust the banks, drop a 2 in the chat right now, guys. In the meantime, let's see. Wick here says corporate taxes have not been increasing at pace with corporate profits because these corporate taxes are more expensive than buying your politicians. Republicans and Dems alike. Oh yeah, they're both bad, right? I definitely do not defend the Republicans. Two-party system was never made. It was never meant to be created the way it is. Two-party system only accomplishes what it's accomplished right now: division, division, weakening of the country, and chaos. That's what that does, right? But we're not done talking about banks here, just abruptly doing weird things. Let's look at this other article. Oh, wait, another abruptly closed account for a Bitcoin holder and client of 30 years without explanation, right? It doesn't matter how long you've been working with them, doesn't matter what you've been doing, right? The National Australia Bank is reporting closing the account of a longtime customer who is also a Bitcoin holder without providing a reason. Just, hey, see you later, alligator, right? The New Daily Mail report, the 455 billion NAB, National Australian Bank, has notified customer Shane Lucas, 49, that he has until October 14th to close his bank accounts or the bank will do it for him. NAB would terminate transactions made to high risk cryptocurrency exchanges in an effort to keep clients away from the scam epidemic, right? This is what it all goes back to. They do not want you to do any transactions with high risk cryptocurrency exchanges, right? They don't want you taking your money out of their pockets because they want to spend your money. They want to invest your money for you to go invest your own money and make more money with it. No, no, no. We don't like that. And then we need to set an example, right? Because then this article comes out, many other people see it, and they're like, oh man, cryptocurrencies are really bad. Look, the National Bank of Australia shut this guy's account down. He's been a customer for 30 years. He's a high net worth individual or whatever, right? And they shut him down with no explanation because he's been messing around with those dirty cryptocurrencies, right? Those dirty cryptocurrencies. I'm not going to touch that. I don't want to lose my bank account, right? All the NPCs start firing off, right? Like, I can't go against the system. No, no, no. I can't go and do that. My bank account is gonna go away. Oh no, oh no. And it creates all this level of, fear of, oh, I can't touch that forbidden area of finances because the banks know what they're doing. And if they're shutting people down, it's because they're dealing with those dirty, illegal cryptocurrency fugazis, right? It's just a narrative. It's a narrative. He even comes out to say that his Bitcoin purchases were not recent and his total BTC holdings are modest. He goes, "I am a shrimp, not a Bitcoin whale. I'm not some big multimillionaire. I'm just an average guy." Right? That's what the guy whose account is being closed. No, no, no. No money for you. It should be a free society where we have the right to purchase what we want. I am not doing anything illegal. But that's the problem. You're not free to purchase whatever you want. You can only purchase what they allow you to purchase, what they want you to purchase. What makes them an incentive or money is what they want you to do, right? They don't want you going out there and making real money. They don't want you going out there and, making APYs on your money that you can't do in a bank account. No, no, no. But it doesn't end there, right? It does not end there. You know what else is happening? Well, talking about exchanges, talking about centralized powers, Bitcoin and Ethereum exchange supplies drops while USDT rises, right? I believe that the Bitcoin and Ethereum has been at like almost a 5-year low. In an X post yesterday, the blockchain intelligence firm Sentiment revealed that exchange supplies for both Bitcoin and Ethereum have continued to drop, aka people are accumulating Bitcoin, accumulating Ethereum, and pulling in them off exchanges. Hopefully, not into hot wallets because those aren't safe. Hopefully, it's into hardware wallets. But let's continue on. According to the post, this indicates that the traders appear content with holding two market leaders over the medium to long term. Of course, they're the safest, least riskiest assets of all cryptos if you're going to be in the crypto game. Exchange supply has resumed going lower as traders appear content holding. And even better news is that Tether is moving back on exchanges now at the highest level since March. What does that mean? Well, as Tether goes into the exchanges, people are going to be converting their Tether, their stablecoin, into cryptos like Bitcoin, like Ethereum, like many others, right? Sentiment added at their post by sharing that 24.1% of USD supply is currently on exchange platforms, the highest USDT exchange supply since March of this year. Meanwhile, 5.9% of Bitcoin supply and 8.5% of ETH supply resides on exchange platforms. Only 5.9% of Bitcoin supply is on exchanges right now, and 8.5 of ETH. That's huge. That's a lot. That's like very little on exchanges. Like I've told you guys, with the Ethereum merge and the burning of Ethereum, Ethereum is going to become scarcer and scarcer. We're already seeing that with the Bitcoin supply and the 4-year cycle, the Bitcoin halving, people accumulating Bitcoin for the long term. Massive, all right. Massive amounts of people are accumulating Bitcoin. And people need to realize this. People forget all the time. But if you literally divide the 21 million Bitcoin that will ever exist, which I believe about 4 million of those are already lost. So there's less than that. But let's go with the 21 million divided by every single person on this planet. Only 0.26%, 0.26%, so less than half of 1%, a quarter of a percent, let's round down to 0.25, a quarter of 1% of people will be able to hold and accumulate one full Bitcoin. So if you're a full coiner, right, a whole coiner, as they call it, in the Bitcoin ecosystem, you are literally the elite. You're literally less than the 1%, right? There's less of you than the 1% of people. And in the long term, that's going to be massive, 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 massive. I I don't know what else to say about that. If you don't look at that, and then obviously we know that Bitcoin is not going to be divided between every single person, because corporations like MicroStrategy, BlackRock, and Grayscale, and the Gemini with the twins, and Coinbase and all, and Binance, and the miners, and all these other huge institutions are accumulating a boatload of Bitcoin, right? They've accumulated hundreds of thousands of Bitcoin, plus all the other billionaires out there and multimillionaires that have been accumulating as well, hold a boatload of Bitcoin. And if they hold a boatload of Bitcoin, that means there's even less Bitcoin for you guys. So that percentage of 0.26, 0.25% is even smaller if you actually calculate on how skewed Bitcoin's going to be towards the wealthier people than the average people. The average people are going to be working in Satoshis. They're not going to be working in large fractional amounts of Bitcoin. They're going to be working in Satoshis. And if you didn't know, one Bitcoin is broken up into 100 million Satoshis. There you guys have it. The future is Satoshis, not Bitcoins. They are Satoshis. So I believe we got some XRP news up here, up next. Good old XRP. All right, we got some. We got some 2 articles here for XRP. So XRP kickstart journey to historic rally. Top analyst positions or profits prophesizes. I don't know what this is supposed to say. 1,300% surge to $7. $7, guys. So the analyst examined XRP's movements in the monthly chart and revealed that his lows of June, XRP has been steadily advancing along its trajectory. The train has officially left the station. How many times have we heard that before? On its way to Valhalla, what, to death? But okay. The analyst stresses that XRP could drop to 40 cents and to $33 range. Notably, this range resides in a trend line, which whatever the EG rag dubs rail A, as recently reported by crypto basic analysts, previously stressed that XRP could drop to these levels. The monthly chart, despite the possibility of such a drop, remains resolute, leveraging dollar cost averaging to stay composed. That's the entire XRP narrative. No matter what, always buy more. Never sell. Always buy more XRP, because XRP is the future, baby. Okay. EG Rag sets his heights to a specific price target, ascends. He identifies 80 cents and $1.30 as the next major hurdles. Next major hurdles, man. How about we get over 60 cents first before we even start talking about 80 and $1.30. We haven't even seen $1.30 in years for XRP, right? Even on the massive lawsuit news, we only got to like 90. We didn't even get to $1. So let's relax here. But okay, let's continue. He says conquering the 80 cents resistance is the first crucial step, with the second key resistance at $1. Well, we already did that one time this year and it did nothing. It didn't even get close to $1.30. But let's continue. XRP at rail B, right? Second path. The real excitement begins when it breaches $1.30. Of course, the question is, will it ever get there? Right? When will it ever get there? In the next 5 years? In the next 10 years? Nobody knows. EG Reg envisions a scenario where XRP soars to rail B, a trend line above rail A, faster and quicker, right? The polygon of Ethereum, right? The price projections become even more astonishing, of course, because now we're just going to go into basic moon math here, but okay. EG Rag suggests that XRP could reach levels as high as $2.80, $5.50, even a staggering $6 to $7. These projections, I wonder what these projections are based off. If they're based off one trend line, this is completely ridiculous. These projections are represented some monumental gains for investors. Well, no duh. They've spent like 5 to 10 years accumulating at 40 cents. Of course, if it ever gets to these levels, it'd be staggering monumental gains. The question is, when are we ever going to get there, and if, right? Obviously, the XRP community doesn't believe in if, they just believe in the when. Ambitious targets imply substantial surges from XRP current price, which demands a 1300 whatever. Meanwhile, the backdrop of EG Rag bullish analysis, XRP has managed to reclaim 50-cent threshold, currently trading at 50 cents and 0.05, right? I think it might be a little bit higher now, like at 53 cents or something. This move follows a dip to the 45-cent support on September 11th. XRP has recorded 4 consecutive days of gains since then. Oh man, 4 consecutive days. God, it's almost like the bull run already started for XRP with 4 green days, baby. We dropped to 45 and we're back over 50 cents. Let's go. It's a bull time, right? It's bull time, baby. XRP is going to the moon because we had 4 consecutive days. These articles are complete nonsense. Complete nonsense. But nonsense or not, I want to hear your thoughts. I want to hear your thoughts down below in the chat right now. Drop a 1 if you believe this article. Drop a 1 if you believe this article. They showed no analysis on why they believe these price points are going to happen or when they're going to happen. They gave you no time frame and they gave you no reason why. They just said these are major levels to look for. And if they get there, it's massive amounts of gains. Do you believe we're going to hit $5, $6, $7? And if you do, when do you think that's going to happen? I want to hear that too. But overall, if you believe this article and you're bullish on XRP, drop a 1. If you're bearish on XRP, drop a 2. Let me know in the chat right now. Right now, as we move on to our next XRP article. Experts explain why Ripple didn't add XRP to Liquidity Hub despite legal clarity. Let's find out. Australian-based lawyer Bill Morgan explains why Ripple has not yet added XRP to Liquidity Hub's list of supported assets despite the coins receiving legal clarity. Yep, same. It is worth noting that in April, Ripple launched Liquidity Hub, a solution that helps businesses bridge the crypto fiat gap. At its initial launch, the solution supported Bitcoin, ETH, Ethereum Classic, and BCH, Bitcoin Cash, Litecoin, and the US dollar. Community reacts as Ripple continues to ignore XRP. Maybe because XRP is a slow rug. That's just kidding, guys. That's just FUD, right? However, XRP did not make the product's list of supported assets. Consequently, several community members are speculating that Ripple did not add support for XRP due to its ongoing lawsuit. Notably, A federal court presiding over the case ruled in July that XRP itself is not a security. After the ruling, several enthusiasts expected Ripple to announce support for XRP immediately. However, their expectations were not met. What a surprise. Instead, they added stablecoins, right? As a result, some community members have expressed their frustrations. I'm sure you're frustrated because it ain't going nowhere and it hasn't been going anywhere for a long time. Adding XRP to liquidity hubs listed of supported assets even after the coin received legal clarity, and they said XRP wasn't included because of legal BS. Well, now it's only one with legal clarity, and they still haven't added to liquidity hub. Let's see what their excuse is. Reacting, Attorney Morgan also said, although XRP has legal clarity, the issues surrounding Ripple's use and sale of the crypto asset have not been resolved, given that the SEC's intent to appeal the court's ruling. It bears mentioning that the SEC is seeking permission to file an immediate appeal to the court's ruling on Ripple's programmatic sales of XRP or other distributions. The SEC is dissatisfied with the decision on both transactions, which the court has found as non-securities. Hence, SEC has requested to file an interlocutory appeal to the challenge of the ruling, yada, yada, yada. Now, let's get to the juicy stuff. Ripple has no obligation to XRP holders. What? He added that the blockchain company is more concerned about the demands of its customers and shareholders than XRP holders. Hold up. Wait a minute. Who's been saying this? Oh, that's right. This guy. This guy's been telling you that Ripple doesn't give a flying fudge cake about you, XRP holders. They only care about their bottom line, their company, the Ripple company, not the XRP token. The XRP token, like I've been saying and speculating, right? Spreading my FUD is XRP will and might be dropped from Ripple, like as their main priority, which obviously they just stated here has no obligation, right? XRP seems to me like it was a test run for Ripple to be able to show banks and institutions the technology that they possess to be able to build their bridge currency, build the ultimate CBDC Swift replacement system, but not actually using the XRP token. They were able to fund this technology and this development with the XRP token, right? With the XRP token sales, be able to create this prototype, put it out there, let institutions test it out and use it and say, yeah, we like this technology or we don't like it or whatever. See where they fit and build their company up and up and up and up to the point where they can just eventually then walk away from the XRP token and continue to work with these partnerships and institutions that came because of the technology that they built with XRP, but never actually ever used the XRP token in any substantial, significant way. Because they've also been building a lot of CBDCs and helping governments build CBDCs, but they're not using XRP. But that's just me fudding, right? I'm just a hater on XRP. But let's continue on. That is hardly surprising, as the XRP community was happy to accept when Ripple argued that there was no common enterprise between XRP holders and Ripple. There are no rights against Ripple from the purchase of the XRP token, and Ripple has no legal obligation to XRP holders, Attorney Morgan added. Meanwhile, Morgan speculated that Ripple will add support for XRP in the near future. Don't worry, guys. They care about you. Just not enough to do anything about it right now. Crypto Steve says, it's so refreshing to hear someone on YouTube say this. Thank you, man. I hope you've been here a long time. I think I've seen your name here multiple times before. I hope you're a supporter of the show. Yeah, man, I'm not a hater on XRP, right? Without any substantial evidence. I hate on XRP, or I should say, I speak truth that the XRP army doesn't like to hear because it's evident and it's just plainly in your face. Crypto was a movement away from traditional institutions of financial money because we couldn't trust them, because we are trying to create our own ecosystem that we as people have no middlemen controlling our money. XRP was a Trojan. In 2017 and 2018, everyone in the crypto space, well, I would say 90% to 95% of people in the crypto space hated XRP. Influencers of that time or content creators of that time despised XRP and didn't or weren't fans of it for the simple fact that it was the banker's coin. Some way, somehow, in 2020, after the fog around the world crash and the new bull run started, this frenzy of XRP holders or freaking content creators came out and about speculating all this wild 589 $10,000 replacing Swift system and created this massive frenzy off speculation and imaginary crazy fugazi CIA operative exclusive information of insiders only, right? This whole conspiracy theory when XRP's never been for the people. Bankers have never been for the people. Crypto was for the people. Not having middlemen was for the people. Why are we banking on the fact that XRP is going to work with banks to become this entire new Swift system to somehow they let us, the people, accumulate XRP from nothingness all the way to $5,000 or $100 or $589 and become the next level of elite wealthy individuals? Really? You think the elite individuals that run the world right now just allow this XRP token to just exist out there for the cheap price that it is, and they're going to have a buyback or do whatever it is that they're going to do and create a whole new segment of wealthy, massively wealthy individuals, just like that? The just boom, just a whole new wave of wealthy individuals to compete with? No, right? No, that's not the way the matrix works. That's not the way the simulation works. The NPCs stayed down here, right? You don't move up in class from a snap of your finger from middle or poor class to ultra wealthy elite, right? And yes, there are exceptions. There are self-made millionaires, self-made billionaires, sure, but that's one, that's two, that's three, that's four, that's five. It's a handful of people, not a massive tsunami of the XRP army just becoming wealthy overnight. It just doesn't work that way. Uh, just doesn't make any financial sense. And there's no reason for Ripple or any government or institution to allow Ripple to use their XRP token to take over the Swift system and give up that power that they have of controlling their own national currencies to now a privatized company to run the world. It doesn't make sense to do that. The governments want to retain power. They're never going to give power up. Therefore, they will never allow Ripple to use their XRP token as the world reserve asset for the entire world, and all these XRP holders becoming ultra wealthy overnight does not make sense. They will not give that power up to one privatized company. They will use XRP, they will use Ripple's technology. They will partner up with Ripple, the company, and use their technology to build other systems like other CBDCs that they're working on, but they're not going to explode the price of XRP token. I've said it before and I'll say it again. It's a test run, it's a prototype. It is not their main priority. XRP army, be careful. I hope XRP hits $5. I hope XRP hits $7 in the next bull run, and you guys can finally make some profits on your bags. But those dreams are just that, dreams. And with that being said, guys, I greatly appreciate every single one of you guys in here. Crypto Stevo says, yep, 99% of noobs who entered in 2021 have no clue about Ripple's history. Ben Armstrong and his XRP army. I mean, it's not even his army. He adopted the XRP army. The XRP army was already well and strong before him. It's just he adopted that into his channel because XRP makes views, XRP makes clicks because they have a cult-like mentality. That's why these creators are so niched down into the ISO coins, the XRP, the H bars, the algos, right? Because they have a quote like following. And as a content creator, you tend to like that because it gets you views, it gets you subs, it gets you a community, a followership, right? An audience. That's all it is. That's why there's certain content creators that only speak about those currencies or tokens, I should say. It's because of that. It's just views, bro. It's all fugazi. It's not real. It just benefits them. It doesn't benefit you. It benefits them. So be very, very careful. And with that being said, guys, always question everything, trust nothing, and until next time, hodl like it's hot. See you guys.